All righty, we are back for another edition, episode 2. Kevin, I think we've got you decided on the topic area today. I'll let you introduce the topic, but maybe introduce yourself to anybody who's listening. Are you still jamming to the beat?
I was impressed by your DJ skills.
Thank you.
So my name's Kevin Lancaster with The Venture Mentor, and I'll be joining Matt here for these episodes moving forward and bringing some insight into building out effective sales programs, whether you're an MSP or a vendor, dialing in your metrics. We'll talk about that, a lot of that stuff today. I'm coming to you from the great state of Maryland, back from New Jersey. The last couple of weeks or last couple of days, I think it was up there the last recording that we had. So it's good to be back in Maryland and getting this thing kicked off.
Absolutely. And, if you're out there listening, I think, we're live here on LinkedIn and live on Facebook. So if you have any questions or comments, we always love to see those during the live show. And it's always fun, at least in the beginning, to find out where you're listening from. So if you're out there listening, please comment and let us know where you're listening from. I'm broadcasting from Washington, D.C., not too far from Kevin, about a 50-minute drive, or maybe less without traffic. And yeah, we're excited to be here today. And, the topic that we're discussing today, Kevin, I think you kind of titled it to live and die by metrics or KPI metrics. And it's definitely something, we talked a lot about, when at ID Agent. And look, so I always love when somebody chimes in and doesn't say who it is, but they're listening from Sweden. And Kevin, I know you have Swedish ties, and I always like it because then I can officially say we have a worldwide audience that we're broadcasting to today.
Awesome. Cool. Yeah, look, this show really want to dive into metrics. I think it's a good starting point with just about any company. It's a good place to start when looking how to scale effectively, how to grow an organization. It doesn't matter if you're a startup or you're large, 100 million, 300, $500 million enterprise. You live and die by metrics. And I think part of that title was it's now more so than ever, because of the intensity of an M&A activity, the volume of M&A activity. It's a focus, and it should be a focus of your organization. And so we'll dive into just different areas of metrics, things to think about. Some are basic, and then some get a little bit more advanced, sophisticated. So as you were mentioning, Matt, when we were traveling the world with ID Agent, and we started that on a shoestring budget, organically financed, no outside capital. Metrics and being close to the numbers was paramount. Daily, it felt like daily that we were looking at every metric we can get our hand on, because it made us smarter in decision making, in how we spent money, where what shows we went to, what activities we invested in, how many salespeople we could hire, and just overall velocity. And so, there was really, probably, as I mentioned, wasn't a day or two that went by where we weren't at least spending a couple of hours looking at metrics. And so, kind of at a high level, and being reflected back to that time period. So sales and marketing metrics were absolutely paramount, right?
Yep.
So one of the first things we looked at is every dollar that we expended, what was the ROI? So when we looked at sales opportunities, or how we're going to generate, marketing qualified leads, we really went to the nines to figure out, what is the data telling us, and how do we reinvest the, whatever capital we had, or what we were generating, income we we're generating, back into the business to drive additional results. So, starting with some of these shows, let's talk about, let's maybe first back up and tell me what helped you define what was success at a show. Like, you're looking at some of these trade shows out there, and there are no shortage of them, and they're coming back online and becoming hotter than ever. But I guess, what were you looking for when you're going out to these shows? What metrics did you look for?
Yeah, also want to give a shout out to Michael, who's chiming in or listening from Israel. So very cool. Thank you, Michael, for joining the show. So I mean, there's kind of the obvious things that you ask, like when you're speaking to a vendor, which is, I mean, you always want to know how many registrations are going to be. And I would probably follow up with a question of, how many real registrations are there going to be, not how many people are going to be there, right? Because there's inflated numbers, right? Depending on how people calculate things, right? There's vendors, and you don't want that when you're trying to figure out whether you're going to get ROI on an event. You don't want the vendors counted in the numbers, because that'll automatically skew things. And then, you also want to find out how many unique, for a vendor in the MSP space, you're going to ask how many unique MSPs are going to be attending, because there might be 500 people attending. It might be 200 unique MSPs, which is still a big number. It just, in terms of, you want to know how many actual companies you could sell to, not how many individuals, because you're not going to sell to 5 people at one organization necessarily. And that metric, to me, it doesn't matter what industry you're looking at, you're going to want to know how many unique logos are essentially attending. So that it was all starting there, and then really had to look at the different activities we were going to perform at the event, because sometimes you just have a booth. Sometimes you spend more money to get a speaking spot, and you got to figure out, you got to look at the landscape. If you're doing a speaking slot, are you going to be competing against other vendors, or do you have main stage? Because if you have main stage, you're speaking to all 450 users that are at the event, pretty much. So you have that in mind. And then if you're doing a breakout and you're going against 3 vendors, well, you're probably going to split that by a third. Depending on depending on who you're going against, and that does matter. who you go against. I can speak, to our early days, there was people who didn't want to go against us because we were such a hot product at the time, right? And that changes over time, and you see new vendors come out and they've just got really great talking tracks, and then you all of a sudden don't want to go against them. So I know those aren't KPIs, and I'm kind of getting to it, but those are things you got to think about when you're coming up with a model for what you ultimately believe you're going to pull out of this event. And of course, the KPI ultimately is marketing qualified leads. There's leads in general, which you're going to get, but what you define as a marketing qualified lead, and everybody out there has a different metric of what they just you might say. Some people might say a marketing qualified leads anybody that stopped by the booth, even if it was just for they do the treasure hunt thing where you have to stop by a booth and you get something out of it. Is that a marketing qualified lead? If they have a real conversation with you, maybe, but so everybody defines those things differently. So once you actually have the calculations for whatever, your marketing qualified lead score is, you're going to base it off of, those are the first things you're going to base it off of. And then you really try to figure out how do you get to people to score up. So if you don't have a speaking slot, how do you get to have real conversations? And that goes into and probably a whole nother show talking about strategies of an event, because I think the biggest mistake all vendors make, and I've made them myself at times, is you're so focused on the actual event and just like your talk track, you forget about the pre and post plans. And because you can really drive a ton of, maybe they were sales qualified leads, but not marketing qualified leads or sales qualified leads, but you can really up their points after the fact. So, a lot of this goes into strategy, but at the end of the day at an event, marketing qualified lead is really, that's what you're gunning for. That's the KPI.
That would drive me nuts, because we'd come back from an event and you have to sift through the dirty data, right? Because to your point, and I think most are pretty, most of the organizations that put on events, they try to be on the up and up, but some do inflate their numbers. And so to your point, they may say, yeah, we've got 500 people there. 100 of those people might be the actual vendors, and production staff or what have you. And then when you finally get your lead list, or your scans, or however you have acquired names or what have you, that number is materially different than what you initially expected. And so you're looking at the throughput and the number of MQLs and the cost per MQL and the cost per ultimate the SQL and the cost of sale. Those numbers could waver or vary drastically compared to what your initial expectation was. And I think it's probably, the first 12 months of at least with Ideation, understanding kind of the nature of the trade shows, the events, the buying behaviors, habits, just the overall production quality of some of the events. It took probably about 12 months to really get a good grip on what to expect from some of these trade shows. Now, I will also say that to your point, right? We had a really interesting product where it would convert extremely well at an event. We would actually skip the MQL, skip the SQL, and get right to the close at an event. And it wasn't uncommon to have 15, 20, 30, individuals or organizations, buy from us at a show, which is drastically different than some of the platforms or products that are really complex, that require trials and demos or what have you. So there's another dynamic to this is what type of product that you have, what's your sales model, what are your days to close, what's your overall process. And so leading into these events, you really want to dial in on those numbers that Matt's referring to, right? First, top levels is MQL. How many potential marketing qualified leads are there at this event? So maybe the broader number is how many leads, how many attendees, are there, and then understanding the flow of that particular event and how organizations or individuals are going to react or interact with you should help you determine how many MQLs, and then ultimately, depending on what your sales process is, are you pushing to MQL and then somebody inside back at the office has to follow up and create an SQL? So you really want to dial in these numbers as best as possible and get down to the, as close as you can to the dollar on what your cost per lead, cost per MQL, cost per SQL will be at each one of these events.
Yeah. And I would go back and I want to reiterate, unique companies. It's so important to understand that, because, I'm just thinking as a salesperson, if you're responsible for telling your CEO when you're creating expectations, you don't want to overinflate the expectation because of your numbers being off. Because the reality is, if there's only, if it's the real numbers, 400 registrations, but there's 200 unique, you don't want to be basing your estimate off of 400 potential leads, because it's not actually 400 potential leads, it's 200. Again, still a big number, but just, you don't want to, set yourself up for failure based on just a simple KPI metric.
That completely skews your numbers, right? Because that's doubling it. So whatever your MQL, cost per MQL, cost per SQL, cost per sale is, you're effectively having to divide it by 2 or doubling it, because they're less legitimate buyers there than there are than when you initially thought there were going to be. So you also get into the sub-demographic and I guess issues or areas where, are they truly buyers? Are they technical folks? Are they influencers? I mean, these are the things that hopefully most relatively sophisticated marketing folks are dialing in at these organizations. But yeah, there's so many things, so many variables to take in consideration, rather than just, hey, let's go to an event, or let's just go speak at an event.
Yeah, and so a couple stories are coming into my head, and one thing I also just I think makes this conversation fun, but also really valuable, is that, I mean, you came from all of this from a CEO perspective, and I came from it from a sales perspective. And I can remember we would argue all the time about like what true ROI was, or true cost of events, because I would send you a number and you would be, I don't know, you would respond in a CEO type of way, because I just looked at like cost of the event, how many contracts we signed at an event, and you were telling me about like back end costs, and I was like, I don't care about any of that stuff. But those are conversations that have, in order to really get to the ROI, you probably do need to have an understanding of the actual costs of everything, right? But I do remember us having kind of back and forth on those conversations, and also just kind of I think it's a funny story, which is, it was, I think, in our first year, there was an event, a big industry event, and you had to write a $25,000 check for it to attend. And I think at the time you had said yes in a meeting about it, just verbally. And and then, so we assumed that was it. Like we could sign for it. And myself and Dana at the time, we moved forward with it. And then you got real upset that we moved forward with it, because it was the biggest check you had written for an event. It was not chump change by any means, 25 grand at the time, especially when it was self-funded. And, we signed 30 deals directly at that event, like not even after the event. At the event, we got 3 times that revenue just, at the event. So it's just kind of a fun story, at least for me it was, to be able to
For you it was, but I'm thinking cash flow. I'm thinking, how are we financing this? But no, I think I remember that moment very, very clearly, and having that conversation. I think it was more of a maybe versus a yes, and then, but no, that one actually turned out, relatively well. And again, like it was, for us, the return on the investment was relatively quick. Now, I'm not talking about, the CAC or how you measure, cost of sales and stuff like that. But, just the initial return, would be really quick. If we're dropping 25K at an event and we're signing 30, we're pumping 90 to 100 grand at each event. Yeah, that was, those were bets that you would make all day long.
Yeah.
But then to your point, you had to factor in all the back end costs. Not just the upfront, you got to factor in the travel, the time out of the office, everything that goes into the sales process, the onboarding. So it's great job on signing, organizations at the events, but there is a bigger picture you have to think about as well.
Yeah,
and that's
absolutely.
That's really good. It's an important thing obviously to share with your staff, right? I mean, it's not just going out there to the event and there's a cost. It's it's understanding the broader impact. And I think the more that you can get your staff to understand it, I think more serious or better everybody, understands the viability and the health of the business. I think that's an important thing.
Yeah, and actually, this reminds me of the point about cash flow. And I think definitely, if you're in a startup, like that would be a great example of it. I would leave that event saying, well, we just booked 100 grand. What do you, why, how could we have any argument about how well we did? And then, but yours would be about the monthly income of the cash flow, right? I was looking at total contract value, and you were focused on cash flow, and rightfully so. But also an important thing that we started to do, and I think it's a good metric to understand. We did offer, at least in the early days, we offered some type of discount if they paid up front. And I don't remember the percentage that paid up front, but it was fairly considerable. I don't know if you have an estimate of what you remember, but it made a massive difference in cash flow. And it really helped us fund a lot more events because we were getting the upfront year like contract upfront.
Yeah, no, it made sense at the point of sale, and when you're out in front of a organization or individual, and there is urgency, and you can create conversion and you create a total upfront payment. That type of stuff helps significantly early on when you're self-funded startup. You get to a point where maybe you don't want to offer too steep of discount, but and then you're okay with just the traditional SaaS or subscription model. I think maybe it was a 10-15% discount, and we probably had 20% of new partners convert. Yeah. That's where you say, to your point, right? You think about spending $25,000 and maybe signing $100,000, but really that first month's revenue is less than $10,000, right? If you're just doing basic, SaaS subscription model, and if you can throw in, 5, 6, 7 paying up front, then that's where you get to, all right, well, this is a good way to offset the cost of the event and then create the SaaS subscription annuity on the back end. So there's definitely ways to look at the pricing models and create incentives that help you cash flow like that.
Absolutely. And, I know there's some other directions I think you want to go with this KPI conversation, but just resetting the room, since we've been broadcasting for about 20 minutes. If you're just joining us, we're focusing today on KPIs. What are some of the most important ones for your business? And if you're out there and listening, not only do we love to hear where you're calling in or listening from, but if you have questions or if you have a favorite KPI, I know a lot of people like really nerd out on their KPIs, and they have like those great dashboards. A lot of MSPs in particular have those awesome dashboards when you walk into their organizations. Whether it's, usually a lot of it's around tickets that are coming in. Sales and marketing, there's, I know a lot of organizations, have that like daily ticker. I think we messed around with that for a minute. I don't know if it ever came to fruition or a full velocity, but so yeah, Kevin, what are some of the other areas with KPIs that you wanted to talk about today?
Well, I think just, we'll wrap up on some of the sales and marketing, but I think one of the more important ones, and one of the reasons why you do this, right, is to eliminate ineffective or expensive or underperforming activities. There's a wonderful world out in the events space. Then you've got obviously the online events. You've got Google. You got organic. You've got peer groups. All these different ways to generate MQLs and SQLs. But I think one of the more important exercises to go through is looking at your underperforming activities, and if there's no sign of hope or not a pulse there, eliminate those right away and double down on the areas that are driving results, are more effective. And so this all flows into your cost to sell and really where you're creating velocity and where to hunt. You have to look up and down the stack. I was with a group here about a week ago where they very much are a technical product, and their days to close, their average sales cycle, I think, was somewhere in the 35 to 40 day range, which is not too terribly bad. You see some that are in the 90 to 120 days, depending on the technical complexities. And that's just to get them to be a customer, and then they have they have a second follow-up, basically, sales activity and getting them onboarded and getting the first customer lit. But, looking back, 90-day or sorry, 35-day sales cycle is not too bad, but you got to figure out, is that from that first MQL at the event? How long does it take you to get that MQL back into the office to be followed up on? Do they have to go to demo? So, understanding these numbers up and down the stack is absolutely paramount. So we can kind of close up on that. Next, and you kind of alluded to with the events and whether you're a SaaS model or you're a piece of hardware that's got a price tag up front, and then maybe in the subscription on the back, really understanding your payment terms, how quickly your receivables are coming in, how easy are you making it, what's your churn rate, what's your bad credit card receipt rate. Those are just, again, no-brainers to, I think, more sophisticated groups, but early on with a lot of the startups, those are things that you don't necessarily think about until you start to see a spike in bad transactions or write-offs, or you start to see your collection days start to creep up. But those are things that you want to, as much as you can, be dialed in on from day one. You really understand kind of how long it's going to take you to collect, how long is that, what kind of impact is that going to have in your cash flow moving forward. And so I think having these numbers at your disposal and looking at these on a regular basis, at minimum weekly, it tells you a lot about the viability of the health of your business. And so again, another just absolutely paramount key metric to look at is your collections. How long is it taking you to collect? Once you're signing with an organization, and what kind of bad debt write-off you have, and ultimately we'll get to churn in a minute, but these are going to be leading indicators to viability, health of a business, and ultimately churn.
Absolutely. And I know in future episodes we're going to probably have some experts on KPIs and probably in all different categories, because it's man, you could just go on and on about the different metrics and what they mean. And a lot of people have opinions of them. I have opinions of them. I think when we talk about another time, when we deep dive into sales and marketing metrics around phone calls and volume, I have a lot of thoughts about how some of those metrics, and I don't love all of them. But that'll be a conversation for another day. But you brought up churn. I mean, churn's, God, man, it's a critical component, especially like for valuation purposes. You want to talk a little bit about that, and what that can mean, or what the difference, I guess, of bad churn versus having good churn numbers could actually mean for a valuation standpoint.
Yeah, look, if there's one metric that you need to look and understand and just be dialed into, and this is a daily, if not hourly number for some, it is your churn. So some products are naturally sticky, right? You think about some of the RMMs and ticketing platforms and email platforms. I mean, those are sticky, and they typically have very low churn because they are so complex, and it's a pain in the butt to switch RMMs, and it's a pain in the butt to switch ticketing platforms. Some products are not as sticky. They're more throwaway, or they're nice to have type of product. And so with those types of products, it's what can you do to mitigate churn? And there's a myriad of things to think about, right? One of the most important things, in my opinion, and this is, I think you're starting to see vendors really take note of this and incorporating this into their overall strategy, is customer success. It'd be in the past where you buy a product, you might get a training video, maybe a quick 30-minute how-to, and then best of luck. And then you hear from an account manager 6 months later, or maybe a couple of weeks before your contract was set to renew or expire, or what have you. And now I think the more successful vendors are investing heavily into customer success, especially the ones that are less sticky, because they have to keep the relationship going. You're probably seeing it with the ones that are sticky as well, that are more complex, that are more utilization based, because that's another number to think about is utilization. You can be bringing on 100 partners a month, but if you're not getting it through onboarding, if they're not utilizing and adding, continually adding new customers and getting that utilization, then you're gonna at some point plateau, and your churn is gonna start to creep up, and that's not going to be a good thing for overall valuation. And so the short answer is, yeah, you want to be on top of churn as much as you can, but the more complex, nuanced is really, what type of product do you have? What's the value of your product? How complex is it? Is it a product that's just you can't live without? Is it a throw? Is it nice to have? And then you're starting to think about what type of contractual arrangements or contract terms that you want to put in place. And that's the love-hate relationship at times in between the MSPs and the vendors, but it's a unfortunately necessary evil at times. At the end of the day, no one wants to be locked in for crazy cable long-term contracts, but if the vendor is investing millions and millions in dollars and it's a core critical product, that might be the best for both parties, right? That might be the best way to go, because they need the assurance that they're going to have paying customers because of the volume or the investments they have to make in the product. And so that's a very symbiotic relationship. So those are things really to start to think about. You're starting to see now a number of auditing platforms, so licensing utilization platforms. There are a few, one out of the West that I'm working with, one up in Canada that I'm working with as well, that are in the license audit, license utilization space. So that's going to be a very, very big topic moving forward for vendors, and it actually might be painful for some vendors, because I think to some degree sometimes rely on low utilization, because it's low utilization equals low, customer support calls. And that, I think that mentality needs to change. But this shift to utilization and away from these big long-term fixed fee contracts is potentially going to hit some of these vendors pretty hard.
Yeah, absolutely. And I almost kind of want to touch back on the contracts, but I wanted to mention Terry. You said he came through halfway on LinkedIn and asked if we could push out the recording. So Terry, just so you're aware, automatically once this ends, the full session or episode will be available on LinkedIn. We will also be putting it on our YouTube channel. So I'll make sure I put the links to the YouTube channel in there so you can view it there wherever you prefer to like it. And we got Andrew Moon, he spies Lord Stanley, and yes, it's a replica, of course, but it is signed by Mr. Wayne Gretzky. So definitely shout out to Andrew for listening today. We appreciate it. But so Kevin, you brought up and maybe we'll end on at least this topic area before we go into what's going on in your world and my world. And by the way, I completely messed up the segment. We were supposed to do that in the beginning. This is the point, though. Like, I think for anybody out there who's trying to put themselves out there in social, sometimes you just got to get out there and do it. It's not going to be perfect. This is episode 2. I already messed up the order of the sequence of our show, but other than me telling you, you wouldn't have known that. So just put yourself out there. I think it's important. And but you talked about contract lengths, and this is a very hot topic with vendors and MSPs, but and I remember, like, when we were doing 1-year contracts at ID Agent, that was definitely like an objection we got from time to time, particularly more as competition came in and things like that. But I often I was on a straight shooter with people, because I mean that we were selling to MSPs, they're entrepreneurs and they're owners, and a lot of their contracts are also 1 to 3 year contracts. But the reality is, I kind of said, look, Kevin's self-funding this, and I just talked about like the future, the acquisition, there's a valuation, eventually. Like, yeah, I don't know. I was a little bit more honest about why we needed to do contracts, and a lot of our value was very much upfront. We put a ton of work in to that first 90 days of a partnership, and people were generally pretty understanding. But I would just, the reason I bring it up is, for an MSP, right? If you have a bunch of month-to-month contracts, when you're going to sell, it is going to make a massive difference in your valuation versus if those were on annual contracts or obviously multi-year contracts. I know Chris Weiser, does these mastermind groups, and that's a big topic that he talks about. Focusing in on getting people over to actual, annual or or multi-year contracts.
Yeah, I think this I often say this. There's a really interesting maturity model in the MSP space, and the good news is that most MSPs are maturing, and they're starting to understand internally their own customer acquisition costs and how long it takes to pay back the initial expense to sell an organization or a customer. And with software companies, if you're within 12 months or under 12 months as far as your payback, that's a great thing. You're beyond 12 months, and it gets, depending on the size and complexity of the transaction, that may not be a bad thing. But the longer the payback period, the longer you need to keep that customer. And so for any company, right? But the software vendors in particular, if they're out there and they're selling a customer month to month, and it's canceled at any time, and it takes you 12 months to get payback on that cost of sale, then that puts you in a rough spot. That's one of the leading indicators, and one of the reasons why a lot of software companies fail to really get to strong profitability, is that their customer acquisition cost is so high. It takes, the payback period is too long, and they can't ever really achieve that velocity. They're having to dump more and more money into customer acquisition costs, and then trying to retain them. And so then they, later on in their maturity, the software vendor's maturity, they'll try to transition to 1-year contracts or multi-year, again, depending on what their payback is and how long it takes to recoup that expense. And so that's where, this is a team sport. I've said that a couple of times, right? It's a team sport with the MSPs and the vendors. And so, yeah, at times it get frustrating, and no one likes the surprise long-term, Verizon or Comcast bill, snuck in there or what have you. But yeah, this is, we have to learn to play nicely. And I think, to your point, you mentioned Chris Weiser. I know folks like Gary Pica, they preach, I guess it's Peaconomics, right? And how to value your business, understanding your costs, understanding what's in your stack, and ultimately understanding, your cost of sale. And so the good news is that this market is maturing. The ones that understood it, the ones that got into the peer groups early on, like the Evolves and what have you, they're the ones that by M&A and transaction percentage, those are the ones that have transacted because they took the time to understand those numbers and invest in their business to be more profitable. So it's definitely something that I think MSPs need to be thinking about. It's not just that the vendor wants to be, lock you into some type of long-term usatory agreement. It's a team sport.
Yeah, and in a common theme I've heard from MSPs on the road about their own contracts, when they have month-to-month contracts with their clients, it's kind of this theme of like, well, I don't want to keep somebody who's not happy and whatnot, but I think it's got to be a bigger picture thing. It's not, you might have 50 customers again that are happy as it can be, and they're going to continue being happy. But again, when you go to sell, that contract value it's not going to help your valuation nearly the same. And it sounds like if you have enough happy customers, they'll be happy to do a 1-year contract, probably. So you got to just start transitioning them over time. All right, so I think we've covered that topic, at least for today. I want to be mindful of times. So now, doing things in the reverse order. What's going on in the venture mentor world, Kevin?
So it's still working with a number of organizations. I've had a number pop up here recently that, I think I made a couple posts out there about some game-changing technologies some that are. So the last week has been filled with working with several organizations on their go-to-market. I have said this again, I think publicly. One of the things I'm running into is that maybe it's more the security folks, I'm not sure, but everybody sounds the same. That's one of the more probably infuriating things about being on this side of the table, is that we were able to create some distance and create a feeling, a brand, a persona. But I tell you, even a number of these companies that I've spoken with here recently, and maybe some are watching, and if I'm offending you, I apologize, but you sound just like everybody else, right? It's so hard right now to understand just at first pass the difference between some of these technologies. And so if you think about it, I've spent the last 20 plus years immersed in this space and making sense of some of these things. You think about some of these less sophisticated MSPs out there having to decide between some of your solutions and competitive solutions. I mean, this is I don't know, it's pretty challenging. So that's, I don't know what's going on these days. This is what's going on this last week, but I don't know. It's recently this has got me up in arms because it's some really interesting technologies out there, but if you can't articulate how different you are or value propositions, it's like, what's the point? So
yeah, I think that's important. Not just for a vendor listening, if you're a managed service provider, a VAR or whatever. Again, it's a commonality, like theme, right? How are you different from the MSP down the road? And you can't. The stacks are so similar. So a lot of it, it's about storytelling. What's your story? What makes you unique? So you gotta figure out your story. And it's like the one fun thing about this is, as we're talking, I just keep thinking of new episodes that we can have, because storytelling is such an important thing. Yeah. And I don't want to go down this path today because it just could go on forever. But that, especially early on, you need to create your story that's going to make you different. I mean, I'm thinking about a vendor. If you're a backup vendor, man, you have to come up with something that's different, because what's gonna resonate when there's 50 backup companies out there? So you got to figure that out. Anything else going on? I mean, I believe you're going to be joining me at an event at the end of the month.
So I'm told. Looks like I'll be back up in New Jersey for an extended period this over the next couple of weeks, and joining you at the
Build It event.
Yeah, Build It. I was about to say, Build It event. So yeah, that'll be fun. That'll be, I think, interesting to see a lot of the vendors up there and get a sense of what's going on. I think they've got Gary V speaking at that one.
Yep, Gary V will be speaking there. Jack Daly, so he's kind of known for his street sales kind of mentality, and and just really honestly, it's like a who's who of the industry. Like everybody, if you go to the website, it's literally like just every person that's important in the not everyone, but there's a lot, I should say. It looks like
we're going to be broadcasting from there, or are we going to do?
There's a rumor of some live, live, like we're going to be like sportscasters and doing some live feeds there, and
play-by-play.
Yeah, and I'm going to even mess around with some vlogging. I've never vlogged before per se, so I got all this equipment on Amazon. So we'll see how it goes.
Oh, out of control. No, that's great though.
You got to try things out,
You got to try it out. No, absolutely. It'll be interesting. That will be an interesting event. Maybe we'll have an announcement or two around that event. We'll see. But that'll be a fun one.
No, absolutely. And I don't know. Aren't you going to ask me what's going on in my world?
Well, what is going on with your world besides buying all these big green screens I see on LinkedIn?
Yeah. So I had to buy the widescreen green screen because once I switched over to widescreen lenses, the other green screen didn't work. So I had to get the widescreen one, and it's still tough. I gotta like jam it up against my back. Like it is very little amount of room between me and the green screen to make it work. But I do like having it for certain videos I like to put out just to have a different background. But yeah, besides that stuff, Next week, I have I booked a speaking engagement. Pretty excited about with Mike Shipman, who's got his peer group called the Transformers, with the four being a number. So he's a peer group facilitator and business coach, and so we're going to be in New York City doing a presentation about really social selling, but around LinkedIn and creating a persona. And really the people in attendance, I'm actually really excited because it's people on the sales side, from managed service providers or VARs or some really large technology companies. And anytime you get a chance to be in a room with salespeople, I mean, you're never done learning how to do sales better. So I mean, I'll be doing a presentation, but I feel like I'm going to learn probably more than I'll get more out of it on the learning side. So definitely excited about that. The other thing, and me and you spent another hour this morning, so I said earlier, like, just get out there and do it. Well, we've done that, but we still haven't come up with a name for this thing. And we have had several 1-hour sessions and continue. I mean, first of all, it seems like everything is taken when you come up with an idea and you think you've hit it and you find out it's already been taken. That's happened about 50 probably times so far. So that's still a pending item on my checklist this week.
Yeah, it's just like going after domain names or what have you. I still like the ones that have a hint of sarcasm, or I don't know, I would say risky. They're risky in the title, but yeah, I mean, a lot of ones that are out there are just kind of how to do this industry, that industry, how to pivot. I mean, it's like they all sound the same. So I know we're gonna have some like really unique ones here, and hopefully we have this nailed down by last week or by next week. I think we said that last week, so we'll come with a better title.
Yeah, I mean, worst case, we can just call it the Channel Halo Podcast or something, But I'm just kidding. I'm kidding. You don't look amused, or your screen froze.
Am I frozen?
Yeah. So there's always people listening at different times, and if anybody's listening after the fact, if you have any cool names you think of for podcasts, feel free to chime in and comment and throw it out there. Even if you're listening to it after the fact, we'll certainly check the comments. But Kevin, I think that's it for this week. I know, going forward, it's, I don't know the exact date. We're going to continue to we are going to start having some guest interviews. That's going to be a big part of the theme of this show. But as we talked about, we wanted to start getting content out there. But we definitely are going to want to bring in, people from outside of the channel to really provide different insights that maybe, we're not hearing, we're not seeing in the channel. I mean, different industries are farther behind in certain areas. I think about like when I used to sell to law firms, they were so far behind in marketing and sales that, you take something from a different industry that's working and did it in law firm, and man, you could stand out so much. So there's so many opportunities to learn from people outside of our own industries.
Absolutely. I think we have our first sponsor of the show.
There you go. Yeah, look at that. I even have a thing sponsored my mail protector. So yeah, and it's another cool thing of just putting it out there, right? We put it out there, and mail protector saw it. They liked this. The path we're going down, and reached out, and yeah, we got our first sponsor, and they're sponsoring a podcast that doesn't even have a name yet. So there you go. So we appreciate the support from them, and I'm sure we'll be hearing from them at some point on the show as well.
Awesome. Good stuff.
Yeah. All right, Kevin, we'll enjoy. I'm positive we're probably going to be talking later today about names. Got one more. Let's see. If possible, could you discuss the difference in how you might approach existing clients versus prospects to raise product awareness?
Wow. That is to your point earlier, that is probably a topic for another podcast, another show, but in different or in general, right? I mean, there is, you get into the two sales, right? You got, new customer sales, new customer acquisition, you got upsells or conversions or nurturing of existing partners. And I think, you have to subdivide your message, your value propositions accordingly to those two audiences. And it's glad you asked that, because that's something that a lot of vendors don't do. A lot of vendors and MSPs. Don't forget the MSPs. You have to nurture your existing customers. So you don't want them going off and buying from somebody down the street. But that is a question where we could spend a couple of hours on the differences, and how customer success and investing in customers and messaging, helps lead to retention. So,
Yeah.
Matt, if you've got anything to chime in with this one, but yeah, this is a big topic.
Very big topic. So, Erica, one, thank you for asking the question. Two, 100% we're going to have a show probably about this now, because it's man, it could take you down such a big path. But I'll just speak to one part of it. The approach to existing clients, because that is a massive challenge that any organization, MSP, vendor side, it doesn't matter, deals with. Do you even have a partner portal, right, to even facilitate? That's the thing. You got to look at your open rates on email, right? When you get so excited about a new product or service you're offering, or a new update. I mean, it could just be an update on existing products, and you're so excited about this new release, and you send out the email, and only 20% of your own audience, your own customers, are reading the email. So that means 80% of people are not even seeing this amazing new feature you have. So there's got to be a real plan around that. So yeah, I actually love that by itself as its own show, because there's a lot of things that go into that. And and it's definitely very different than raising awareness from prospects. So I know I didn't really answer anything per se there, other than saying that I love this actual topic, and it's a massive challenge that everybody feels. So Erica, thank you for sharing that. And I've got my notepad. I'm 100% putting this down as a topic so that we can really dive into this much further. All right, Kevin. So there we go. Episode 2 is on the books.
Good stuff. Well done.
And now we're going to have to come up with a sign out too. Maybe not today. We're going to have to have something to end the show, because I always struggle with how to end a show. So we got to figure that one out too. Maybe we'll have a little outro video or something. I got it.
It kind of reminds me of Talladega Nights, where I don't know what to do with my hands, and the awkward moments.
Yeah. I think I'll do an outro video. I think that's the way to make it less awkward.
So, you're getting pretty good at that Canva stuff and video production.
That's the other thing. I downloaded a new software so I could do overlays on videos, which is really cool, because then it breaks up the video. It's not just me talking. I'm talking over, a CISO talking to the team about security. It's pretty cool. If people should check out.
Now we know what you're really doing. What you're really doing this past week. Just playing with tools.
Exactly. All right, Kevin. Well, have a good day. We'll talk later. Thank you to everybody for listening.
Right on. See you guys.
Bye.